All right, everybody. Good morning. It's Angie Pettyjohn of the Pettyjohn Group of Mortgage Alliance. I'm here this morning with my very good friend, Ben Jacobs. Hi, Ben.
Hi, how you doing?
He's good. I'm really good. Ben's a financial consultant with Primerica. I welcome you today to our Friday morning chats. I appreciate all our regular chats on an ongoing basis. Ben's one of my go-to people that I lean on for financial resources. Ben, I think you want to do something a little different today. So what
Yeah,
are we up to?
thanks for having me back, Angie. So
Yeah,
today
you're welcome.
I thought maybe we could turn the tables a little bit. Last time we spoke, I felt like oh, sorry,
Hey,
that's my dog.
hey,
Um,
doggy.
yeah, I felt like I spoke a little too much last time, so I figured today let's turn the tables, and I actually have some questions for you.
Open.
Um,
That's fantastic.
so
Well,
if you don't mind.
I don't mind at all. It's a little nerve-wracking being on this side. I have to say, I know this was coming to me, so little more heart palpitations this morning than usual. I have to comment on your background. I see you're also a Leafs fan, so
A little bit, yeah,
a little bit, a
a
little
little
bit.
bit,
Yeah, me
a little
too,
bit.
just a little bit.
Awesome. Yeah. So I just, I've been talking to a lot of clients, specifically a lot of my younger clients lately. And with everything that's been going on in the real estate market, and obviously things have been changing with COVID, and, people are now starting to go to showings and thinking about maybe buying that first house or second home or whatever it is. And so I had a lot of questions lately about, what's the process? How do with me, I'm helping them budget and save for that down payment. But as far as taking it to the next level, that's not where my expertise falls. So I thought it'd be a great opportunity today to almost put you in the hot seat and pick your brain about just what's the initial process is, and just how I can give more information to the families and the people that I'm working with as far as buying that first home or buying that income property or whatever the case may be, but just some fundamental things that they need to do or prepare for when
Yeah.
they're looking at buying that home or getting a mortgage. So,
Yeah,
you know,
yeah. That's the golden question actually. You know, what do the clients need to do?
mhm,
Um, I find that one of the biggest mistakes is waiting to the last minute to get pre-approved. People hear that and they go shopping with their realtor. Actually, a lot of realtors right now won't even take them on a viewing tour until they have been pre-approved. But I say even before that stage where you've contacted your real estate agent, work with a financial advisor like yourself to ensure that they've got that down payment. And first time buyers have the option to put 5% down all the way up to 20%, depending on whether they want it to be insured or not, or access to more money. They have opportunity to have gift money as long as they put 5% of the funds down themselves from their parents. So all of these things take time to figure out. Um, a lot of my first time buyers come to me, let's say even 6 months before. I even would recommend come to me the second you are 25 years old. Let's figure this out. Let's work with a financial advisor. Start working on your down payment. You can use your TFSA. You can use your RSPs up to 35,000 without getting
right.
dinged taxes when you pull it out for your down
Yep.
payment. Um, let's work on what does a $50,000 income qualify you for, because that's generally where you need to be at. Well, if you've got a boyfriend, if you've got a live-in or something, then you can add their income. We're looking at about 4 times that income as the amount that they can qualify for. So that's a good guide for a
Okay.
25-year AM.
Okay.
It's actually 4.2 times their income. That's a baseline of what their mortgage amount would be.
Perfect.
So yeah, so I'd say the second you're 25, 24, and get your eye on that prize, and
Mhm.
let's start working. So we know we need to put aside what are your numbers? What do your numbers look like? So we'll figure out what your max mortgage is, but also on the other side, what does your credit score look like? Can't tell you, Ben, how many times I have a first time buyer who didn't pay their student loan or had a silly MasterCard, you know, one of those things where you go on campus and you're at
Yeah.
every corner, you remember.
Oh yeah.
At every corner you're being accosted to sign up for a MasterCard. Like, so you get a MasterCard and then you don't pay that, or you've got some blemishes on your bureau now. And that year and a half, 2 years, I could help you improve your credit score
Okay.
by mitigating those things. But if you wait right before you've gone shopping, you meet up with your real estate agent, and then you go shopping and you fall in love with the property, well, you're going to get heartbroken now, because it's going to take you at least 6 months for us to figure that out. So let's avoid those pitfalls and come to me right at the beginning, right when you, like I said, you're 24, 25, let's start talking.
Perfect. Yeah, because that was great, Angie. Thanks. That was a really good summary overview, because that's one of the things, like the most common sort of beginner client that who I'm talking about is that they're, like you said, they're late 20s, maybe early 30s. Like you said, household income is about maybe 50K a piece. So we're talking about 100,000 and maybe just above that. And that's your typical Canadian young family, middle income family, right? And it's like, well, they ask me all the time, like, we're saving, but what can we get? What do you think should we just go to the bank? Like, so I just wanted to ask you, in that scenario of your kind of middle income, you know, whether they're married or common law, whatever they are, what kinds of considerations should they be looking out for before applying for a mortgage, or like you said, or if they're looking at a home or things like that in terms of their budget?
Yeah, and you know, there are options if they find something a little bit higher outside of that maximum mortgage range, with perhaps putting a parent on as a co-signer, or the gift. The gift is the easier way. Co-signing, a parent is basically saying, if my child defaults here, I will pay up. So you're on the hook as a parent for this. Often parents don't recognize that, but that is one thing that we do speak to the parent at the time and say, look, you're signing on here that if there's any default or anything like that, you're on the hook for this as well. You're on this loan. It's going to show up on your credit bureau.
Right.
And a big mistake also is assuming that the parent has no debt. Well, I can tell you that parents between the ages of 40 and 50, that's the time they're at their increased debt. You got kids that were still in school paying off, if they've helped co-sign loans there,
maybe weddings or other stuff that is going on, right?
Right. So when you think a simple solution is to add a parent as a co-signer, it actually could complicate matters.
Okay.
Again, let's go back to, come to me as soon as you know, and then we can go through those options. We can do this on your own, but your maximum mortgage is going to be less. You can do it with a gift, so we can bump it up here. We can co-sign it. We have to qualify the parent as well.
Awesome. So you already sort of answered the question, but I just want to give people a definite answer. So let's say this, in the same scenario, this example client, your typical, late 20s, early 30s family, if they're about 1 to 3 years away from purchasing that home, at what point should they be engaging someone like yourself?
Oh my goodness. I would say as soon as possible, Ben. Okay. That way you can help build their down payment, right? And I could help them on the flip side with what their qualifying criteria is. I want to make sure that everything is fine on their credit bureau. I want to make sure that their income will qualify them for what their ultimate goal is. Like, if I sit down with a client and they're looking at a property for $750 and their income doesn't allow that, well, there's no point looking at. So we might have to plan, 3, 4, 5 year plan for them, instead of this is where you're going straight off the bat.
Okay.
Yeah. So to answer the question, I would say as soon as possible.
Okay.
And when they work with a mortgage broker, what we're doing at that time is we're pre-qualifying them. So we're not submitting documentation to any lender at that point. We're just reviewing their numbers. Know your numbers. That's actually the very, very first step of this mortgage process. Know your numbers. So we do a pre-qualification. I do like at that point to pull their bureau so that I'm aware of everything that's going on, so that as we progress, you know, over the next 6 months, 1 year, 2 years, nothing pops up that is surprising. So I need to know everything. And this is the time when the client does tell me if there is something on their bureau, so I can help them through with a credit repair program. We do that as well. So
Awesome.
when you work with a mortgage broker, we're helping you through that process. It's not transactional, as it may be when you go to a bank. You go to a bank
Yeah.
and they're just telling you, have you made your purchase? No. Well, then we can't help you. Well, with us, we're looking at pre-qualifying you. Let's stay in touch through the next year, 2 years. Let's say if they're self-employed, well, we're going to need 2 years, because you're going to need 2 years average on their NOAs. What does that look like? So it is a very cumbersome and overwhelming process if you're not working with the right person. Obviously, the Pettyjohn team, we're the right people. And I pride myself with that. You know, I'm a mom. My daughter, she's my underwriter, you know, Ben, and I pride myself in really caring about the first time buyers. It's nothing more rewarding to me than to see them go from first year all the way to purchasing their first home.
That's awesome. And that you kind of answered the question a little bit, but I was going to ask you, because I get the same question a lot in my industry as well, is that like, why would I go with a broker? Or why would I use a mortgage broker over instead of the bank? And, you know, so I don't know if you can, you touched on it a little bit, but basically, like, I don't think a lot of people actually know the difference, or really why they would use a broker, whether it's investments, insurance like I do, or as a mortgage broker, like I can just go to the bank because that's where my money is anyways.
Yeah, I think the main reason you'd want to go with a mortgage broker or with a team like ours is that we do look at your full financial goals. We're not transactional at all. And with a top team like ours, we get access, we have VIP access and best rates with many lenders. So we work for you, we work for the clients. We're not working for a bank. We do get paid, as you know, this is our job, but you're not paying for our fees. And we're searching the absolute best product for that particular client. Often clients will walk into their bank and they're pigeonholed to whatever product that bank has, when there's so many options and opportunities out there to have a mortgage.
Yeah, and you know, it's funny, like I use the exact same analogy because, of course, even in the investment worlds, you know, people do the same thing. Like, I bank there, so I'm just gonna have my investments or whatever they are at the bank, and you know, I tell them like, well, hey, do you shop at Costco? And you know, most of us do, right? Especially in this area, and we love it. And it's like, well, listen, tell me this: would you still be as gung ho to go to Costco if all they sold was Kirkland brand?
Right.
Probably not.
Yeah,
the reason we go to Costco is because they have high-end brands and they give you options and they give you those bulk discounts. But Costco's already sourcing all the best stuff and giving it to us at bulk and good rates. So I make that analogy to them. That's, listen, when you work with a broker, again, whether it's a mortgage or it's an investment or insurance product, your broker is again, like you just said, you put it best. They're working for you, not the institution. So our client is the person. So it's in our best interest to get you the best rate, the best products, and take care of you, and always be searching for that next deal. Where if you walk into whatever bank, they're going to, I almost guarantee you, they're going to give you their bank funds and their bank mortgages. It's not like if you walk into a TD, they're going to be like, well, you know what, RBC's got a better rate. Let's get you an RBC mortgage. That's just not going to happen, right? And so, and that's one of the things that I say a lot too. But you also, I just wanted you to clarify a couple things. You mentioned earlier in our conversation here, pre-approval, and then you just said pre-qualification. Can you explain the differences between those two?
Yeah, that's a really good question. So when we see our client 1 or 2 years before or 6 months before, we'll run some numbers, we'll check their credit score. We're not submitting the file to a lender. Okay. So we're underwriting it. We've collected documents. We've verified everything. We always say we trust our clients, but we need to verify. We do all of that. However, we're not submitting it to a lender. When a client has we can submit a pre-approval if within the 120 days of purchase, and then there's a rate hold attached to that, and we do that as well. In this environment right now, for example, I did not submit my pre-qualifications for pre-approval because I know we're in the midst of rate drops.
Right.
Bond market is low. Bank of Canada is wanting to ensure that our debt is taken care of, so they're not increasing rates. So we're looking at an environment where rates are coming down. So I choose not to submit for a pre-approval right now. However, I can if the client really needs that document. But that's pretty much the difference.
Okay.
And once there's a purchase, then that pre-approval, we submit the purchase agreement. That pre-approval becomes an approval with conditions.
Okay.
Make sense?
Yeah.
So I always say the pre-qualification is the math behind it all. And then the pre-approval on the process to approval is that stamp from the bank saying, yes, here's your mortgage, but we need a few more things.
Okay. Awesome. I think we have time for another question.
Sure.
Okay, perfect. I heard some changes are happening in the news with CMHC. First, I think maybe some people don't even know what that is, so maybe start with talking about what that means. But I heard there's some changes, and I was just curious about how that's going to affect new clients, because I know what CMHC is, but if you could explain kind of to the audience what that is, and then how that might affect them going forward, especially first-time home buyers who might not have that 20% down payment.
Sure. So CMHC is a Canadian Mortgage and Housing Corporation, and it's one of 3 insurers that lenders have partnered with. And when a client puts less than 20% down, they're charged a CMHC or an insurance premium on that mortgage. And that premium is really to safeguard the lender, but the purchaser is the one who's paying for it.
Got it.
So if you were to default or anything, there's processes this insurer will take over. So just recently, as of July 1st, CMHC has tightened their lending criteria. And what they're saying is the debt ratio to income, they've tightened it up. So it used to be 35-42, now it's 32-40. So debt ratios, just bear with me for a bit. So there's 2 that we look at. One is just housing costs and one is total debt. And that's where that 32 and 40% of your income needs to be.
Okay.
Yeah.
Okay.
So there was a lot of grumblings, and a lot of us were like, oh, of course this is going to happen right now, the first time buyers. And then we got some fantastic news that Genworth and Canada Guarantee are not following suit.
Oh, so those are the other two. Those are the other 2 insurance companies.
Those are the other 2 insurance companies. So it really has no impact on the first-time buyers. But because the media picked that up, and they also picked up an error that CMHC made in one of their press conferences, suggesting that housing prices were going to come way down, up to, I think it was like 18% down. It really caused unnecessary stress on our first-time buyers and buyers who are looking to even invest, for example, with less than the 20%.
Interesting. Okay.
Yeah.
So all in all, it's not a huge deal as maybe it was made out to be, just because.
Yeah.
Okay.
Yeah, like the media didn't pick up on Genworth and Canada Guarantee being the ones that there's options for them now, whereas CMHC, it's good news. It's newsworthy.
Interesting. Okay.
Yeah,
you mentioned something, and just before we wrap up, just because it overlaps with what I'm talking about. A lot of times, a lot of my clients will say, talking about the CMHC and insurance, but they say, oh no, I don't know if I need that because I have mortgage insurance. Now,
right.
I know the difference, but
yes,
maybe explain what mortgage insurance is, or it's also known as creditor insurance, versus CMHC, because some people are like, well, what do I need that? I have CMHC, and I don't know that they understand the difference between them.
Actually, that's a fantastic question, Ben. There's your insurance on your mortgage itself for being less than 20% down. So that's the one where CMHC, Genworth, and Canada Guarantee insures. And that is insurance, you're paying for it, but for the lender. Okay.
Right.
Then there's mortgage insurance or life or critical illness.
Right.
Or so lenders call it mortgage insurance, but you're really insuring and looking at when you're increasing your debt, you're insuring your person.
Right.
Right. So
Yeah.
just like you've got insurance that you pay into from your company that you work for or
Yeah.
whatever, and you pay into life insurance. This is the same. So my recommendation is to always speak to an insurance broker actually versus
Right.
just taking a look at what the lenders offer you. There's some really good options right now, but an insurance broker would best know that. And then the other insurance that really confuses people is they need to have housing, fire insurance. So
Yeah.
they're like, what the heck is this? That's something totally different.
Yeah.
So just very top line. One is you're insuring the actual debt on the property. One, you're insuring your person. The other one, you're insuring your property. Does that make
Right.
sense?
It does. It
And you
does.
need them all if you
Yes.
yeah.
Yeah, and that you explained that perfectly, and I try and communicate that to the clients, and sometimes they just like I just seems like it's a whole lot of insurance, and it's like no, they all serve a different purpose,
Yeah.
and so that was great. But yeah, I don't know if there was anything else you wanted to make mention on the topic today, but I want to just thank you for taking the time and helping me. I know this is going to be extremely valuable for my clients, my audience, and I'm looking forward to sharing this video with them. So thank you for having me as a guest and letting me kind of take over today.
Yeah, I really appreciate it, Ben. It was a lot of fun. No, I'm good. I think we did a lot of top line things right now. As usual, people can contact me. The Pettyjohn team, you can look me up or call me 416-970-9107. I'm around. Ben, I appreciate it. I appreciate our friendship that we've made over the last year or so. Looking forward to more partnerships between us. Thank you so much. And everyone have an awesome Friday and an awesome weekend.
Awesome. Thanks, Angie. Take
All
care,
right.
everyone.
Bye for now. Bye.